Hi everyone, I am Sounthiri, Associate Professor and Head, Department of Commerce, Accounting and Finance, Vellalar College Forum and Erode. In today's class, we see the income tax concept, especially residential status provisions. And all are well known about the tax concept. It is imposed by the government as a compulsory payment. I think all are well known about the tax. It is imposed by the government on individuals, business or entities. These funds are collected by government and utilized for the public services and infrastructures and providing hospital facilities and also school operations. So clearly we understand it is not a voluntary payment. It is paid by the every individual as compulsory and as per law. If we fail to pay the tax, it is the government have a rights to pay penalties and imprisonment. And we move on to know about the residential status. A residential status is determined by how many days we stayed in India. Especially persons means either individual or HUF or company. Any person, how many days he stayed in India on the basis of staying, it is determined by the government. Is it need to determine the residence status? Yes, it is very important to determine the tax liability because tax liabilities are determined on the basis of their residential status only. So residential status are classified into three types. One is resident and another one is non-resident and third one is resident but not ordinary resident. Next slide we have to see the provisions for residential status. So first we see the residential status of individual. There are two basic conditions to fulfill the residential status. First one is the persons must stay in India at least 182 days during the financial year. And second basic condition is he must stay in India at least 60 days during the financial year. And cumulatively he stay in India 365 days in the 4 years preceding the previous year. These are the two basic conditions. If any person satisfy any one condition or both, he may called as resident. He may called as residents. So again the residents are further classified into two types, resident and ordinary resident, resident but not ordinary resident. In next slide we see the rules for these two conditions. Then next we see the non-resident. If any person does not satisfy the basic conditions, both the basic conditions, that person is called as non-resident. Here are the additional conditions for resident. There are two additional conditions. If a resident, if any person is declared as resident, he checked her provisions. That is, he must stay in India at least 730 days during the 7 years preceding the previous year. And the second one is he must act as a resident for at least 2 years out of 10 years. So if any resident satisfy both these additional conditions, he is called as an ordinary resident. If he failed to any one additional condition satisfied, he is called as not ordinarily resident. And next we see about the residential status of HUF, Hindu Undivided Family. So for Hindu Undivided Family, residence status is defined by their control and management, where it is belongs. If the control and management is belongs in India, the HUF is classified as resident. If the control is situated in outside India, the HUF is called as non-resident. For additional conditions, Karta is declared as a person to satisfy additional conditions. If the Karta satisfies the additional conditions, that HUF is declared as ordinary resident. If Karta is not satisfy the additional conditions, he is called as not ordinary resident. Next we see about the residential status of firms and companies. These also designed as on the basis of their management. For firm, if the management is controlled wholly or partially in India, that firm is called as resident. If the control and management is entirely outside India, that firm is called as non-resident. For companies, Indian companies always considered as a resident. For foreign companies, if place of effective management is in particular financial area is situated in India, it is called as resident. If the place of effective management is situated outside India, it is called as non-resident. Place of effective management means where the key management and commercial decisions are made. That is called place of effective management. That POEM is situated in outside India, it is called as non-resident. That's all about the provisions for residential status. It is very important to declare the tax implications for the every individuals. So next we see the tax implications based on their residential status. For resident and ordinary resident, all income earned is taxable in India. but resident but not ordinary resident, the income earned in India and controlled from India only taxable in India. For non-resident, if the person income earned, received and accrued in India only taxable, other incomes are taxable in their original citizenships. That is the provisions related to residential status. Thank you.